I I hope my voice is audible to all of you. May I get a quick confirmation over the chat box. Am I audible to you? Yep. Awesome. Okay. So how was your result, guys? What's up with the results? Finally, I got done with those sessions and everything. So we are a few people in the class. How was the result? Have you got any result today? Or you giving FR for the first time? Nobody received results today. FR first time. Okay, good. Not to give up. Okay. Yeah. Given FM, not pass. It's okay. You'll pass it next time. So you're giving both the papers together then? FR and FM? Only FR. Okay, good. Yeah, so we got 74 as the highest score from our last FR batch. So till date, like till now, this is the data that I have, even though I don't have the full access yet. Like we are yet to message the students and get the exact scores. But the ones who've informed us, so that's the highest score is 74. Okay, let's begin with our session. Before I start, just can you confirm to me that have you guys completed all the concepts of IFRS 15, IFRS 16, uh, IFRS 9, IS 12, deferred taxation, IS 37? Have you guys completed these syllabus areas? Yes or no? What's the update? Because if you have completed, then only I can pick up section C question. Otherwise, I'll pick up MCQ. There was the issue with revenue. Oh, yes, Nikita, right. Let me just check it now only. Due to result, I just was not able to check that. I've just joined the course. Not yet. Come on, quickly tell me. Okay, Nikita had an issue with IFRS 15. What about others? What's your score or what? Sorry, not your score. I'm doing this morning. But what's your update on the coverage of the syllabus? Logesh says not yet. Mihika says just join the course. What about others? Muskan, what's the update? Madhuri, Muskan and Madhuri, what's the update? Have you guys completed? Yes. Okay. So let me try a section C question. Let me try section C question today. Like last time I gave you homework from the MCQ. So Muskan, that's great that you've tried. Let me try a section C question, but because at least you should know what is coming up in your paper, okay? Because if I keep on doing MCQs only, how will you get to know what's there in the long question? I don't want to scare you towards the end of your preparation that oh my god, this section C is also there. So I need to introduce you to the long questions today. So if you have done IFRS 15, 9, IFRS 15, one part, if Nikita, you've not done, that's fine. But if you've done like all the other standards, let's try one question today. So let's try this MIMS company question. This is related to single entity financial statements from your exam kit. It's a long question which we will solve in our Excel sheet, in our spreadsheet. Okay. So today, for the first time, you'll see the presentation. So if you want to understand few standards application, you would still understand the way I'm presenting, the way I'm thinking, the way I'm solving a question. So your only role in today's class is to just sit back straight and see me solving the question. And whenever you have a doubt, you ask me. I will share the Excel sheet with you after the class, and you have to just listen to what I say. And if I ask you to do some calculation, you have to do that calculation. So keep your calculators handy. Okay, that's the only thing that you have to do. So let's start with this question number 417. It is on page number 146. Everyone, please kindly open it on your end. Okay, 417. Yep, here it is. So what we have in the requirement is, first they're saying prepare a statement of profit or loss for MIMS company for the year ended 31st December. So they have given me the year end, and for 12 marks, I'm supposed to prepare the statement of profit and loss. So in this statement of profit and loss, I'm supposed to show my revenue, I'm supposed to show my cost of goods sold, right? That's how you prepare your P&L. And then I have to prepare a statement of changes in equity. Then they're also asking you to prepare an extract of statement of cash flow. So we have not done this cash flow yet. So I'm not going to take this up yet. Okay. We will do this when once we complete cash flow, then I'll take this up. For now, we can do these two parts. What is statement of changes in equity? Do you remember from your initial introductory lesson, I told you that there are various statements, P&L, balance sheet, changes in equity. So this changes in equity is that rare statement which we have not seen in general. So you might feel like, oh my God, what is this? Is it out of syllabus? No, it is that rare statement which tells you about what was the opening balances or what were the opening balances of your equity section of the balance sheet. That means of your share capital, share premium, your revaluation surplus, your retained earnings. What was the opening balance? What were the movements during the year? And then what would be your closing balances? Right? So this is basically our requirement, which is asking us to prepare this statement, which is the statement of changes in equity. So we will do it for the first time today, right? We are learning. It's not, today's session is not something where you will judge yourself that, okay, I have done this, I should know this biologically or I should know this naturally. No, you will know it once you solve it. So today we will learn from this question. This is a learning class, not judging yourself class. Okay. So let's see. P&L and statement of changes in equity is required. So what I will do is I'll first prepare my Excel for this. So if you guys are like keen on to actually make the Excel along with me, that's totally your choice. Otherwise, you can just simply check what I'm doing. Okay. Just see me solving the question. That would be fine as well. No need to solve it yourself. You'll do it later on. Okay. There's a lot of time for you to solve questions. I'll give you myself many questions. Today, you just see. So let me just start with this. Just give me a minute. Okay. So let us prepare the format first. I'll first prepare statement of profit and loss. So I'll give a heading, how the statement of profit and loss looks like. We'll give a heading, statement of profit and loss. It is always for the year ended, right? Because the balance sheet is at the year end, as at. This is for the year ended 31st December 2015, whatever is the year. So we first have our revenue. This is the format, standard format of any P&L. So with time, you will learn this, like it will come very handy to you. So revenue minus COGS, that is cost of goods sold, gives you gross profit. From this, you deduct many type of, expenses. So let's see what all expenses do we have. So they have given us a trial balance where we can find the expenses. We have admin expenses, distribution expense. Is there any other expense? Finance cost is there, investment income is there. So what I'll do is I'll use these headings. So I'll say from gross profit, deduct administrative expenses. Yes. From this, deduct distribution cost, and that will give you your profit from operations. What is this profit from operations? See, you got your gross profit. This is your gross profit. What is gross profit? Like when you, from your sales, if you deduct your direct expenses, you get your gross profit. So that is something which is gross, which is coming out of your factory. Like direct expenses are where the manufacturing is taking place, any expenses related to manufacturing, the factory expenses basically, not the office ones. So gross profit is what is my direct profit, which is coming out. From that, I deduct all the office expenses, selling expenses. That gives me profit before interest and tax, which is known as profit from operations. So profit from operations is nothing but PBIT. Yes, this is nothing but profit before interest and tax. So that means after this, I will deduct interest and tax from here. So I will have my finance cost deducted. But also I have investment income. See, investment income is also not profit from operation. So here you can't say, because you have investment income. So here you can't say that this is PBIT, because we are talking about genuinely from operations. Because I can't say my investment income is from operations, right? Go by the word meaning. I said profit from operations. So do you think your investment income is from operations? How good I'm doing at TG professionals, that does not impact any share portfolio that I have. So if I've made any investments in some shares that I've made, I purchased, that does not impact my performance as a tutor, right? So that's not my operation. So that's a different thing. That's why profit from operation, from that deduct the finance cost, in that add your investment income. Yes, add your investment income. And from that, you deduct your taxation. So you get your net profit, which is known as profit for the year, PFY, right? So this is what I have to prepare. And then in my second part of this question, I'm supposed to prepare statement of changes in equity. So what is there in statement of changes in equity precisely? It's all about my equity section of the balance sheet. So in my trial balance, what all things do I have which are related to equity? Deferred tax liability, is it equity? No, it's a liability. Provision, is it equity? No. Retained earnings, does this go into the equity section of the balance sheet? Will this go into equity section of the balance sheet? Retained earnings? Huh? Will this go into retained the equity section? Yes, very good. So this goes into the statement of changes in equity, my retained earnings. What else? Share capital, does that go into the equity section? Share capital is also equity. So this will also go. Intangible asset, is it equity? No, this is not in equity. Intangible asset is an asset. That's a different section of balance sheet. Investment property is also an asset. So we will not take these ones. What we will make in our statement of changes in equity is, how does the statement of changes in equity looks like? Just have a glimpse. What you do is, you have your share capital. Okay. You have your share capital. You might have your share premium also. So always make a column for share premium. Sometimes shares are issued during the year. If there won't be any balance, we will keep it zero. And then we have retained earnings. These are the three most essential parts of equity section. You might not have surplus, revaluation surplus. You might not have other reserves, but these are the three basic things which are there in equity. So you will make three columns for them. And then you will say what was their balance in the opening date. So opening balance. Then what was the movement during the year? So if there was any movement, like for example, there was share issue, or there was a profit during the year, that also gets added into retained earnings. So you will make those changes due to the movement. This will give you closing balance. So closing balance of all these heads. That's how you prepare statement of changes in equity, right? So we will see in the question what all things are happening which is impacting my equity. And I will adjust that over here in this statement, right? Now let's get started with the reading of the question. We've already prepared our format, so we know if we find something where we are supposed to place that figure. We have created our format beforehand. We know the requirement. By making the format, we also know where the question's direction is going. So we are not clueless, right? So let's read the question now. What do I have? MIMS company noted there is an error in the inventory count at 31st December, meaning that closing inventory balance in the financial statements was overstated by zero point 0.7. No entries have been made to correct this error. Now, tell me honestly, from your studies, do you remember, like, if you're from India, I think in your class 11th, we've done a chapter known as rectification of errors. Do you remember a little bit about it? Do we remember the name of the chapter? Yes. So this question relates to, this part of the requirement relates to that chapter only. There is a mistake and we are supposed to rectify that mistake. So we have to think rationally as accountant, what would be our journal entry to rectify the mistake? So here they say, what was the error? The closing inventory of the previous year was overstated by 0.7 million. If previous inventory was overstated, that means, what does that mean? If I have to decode it for myself, I would say, let's prepare our working note. So working note number 1, I will decode it for myself. If you see my interview with the student who got a 94 with me in one of his attempts, you would realize he said, I used to write as much as possible in the working notes. So that is what I will do today in front of you, so that you also understand and you also, you know, develop the habit of explaining as much as possible in the working notes. So it's like in the working notes, you are teaching the question to yourself. So I will teach the question to myself in the working note. So the question says the opening inventory is overstated. So if opening inventory is overstated, where is opening inventory calculated or shown in my P&L? What's the formula of my COGS? My COGS formula is opening stock plus purchases minus closing stock. Now tell me, if this figure of opening stock, if this figure of opening stock is overstated, so if I have to say, if in the above formula, opening stock is overstated, that means the COGS is understated or overstated. Look at this equation, COGS equation. If I overstate opening stock here, if I increase this, will this increase or decrease? Yes. This will increase. This will increase. Yes. Okay, fine. Now this is about the opening stock. But what they are saying is there was an error in the inventory count, meaning the closing inventory of the previous year was overstated by 0.7 million. So that clearly means that I am supposed to remove 0.7 million from my COGS. Am I right? So I will say if in the above formula opening stock is overstated, that means COGS is also overstated. Thus, we need to remove 0.7 million from COGS. Makes sense. Now, if you will remove it, what will be your journal entry? When you want to remove something from your cost has a debit balance. You all know expenses have debit balance. That's the general rule of accounting. So I have a debit balance for COGS. But I want to decrease my COGS. So that means I'll be crediting the COGS. But what about the debit, corresponding debit? What will you debit? What will you debit? This year's cost of sales needs to be credited. But is not your previous year's profit also over or understated? How do you think about it? This year's opening stock was overstated, but previous year's closing stock was overstated. This year's, let me just write it rather. Okay, so I will write it here. Due to overstatement of inventory, this year's COGS is overstated and previous year's COGS was understated. Why was it understated? Because previous year's closing stock was overstated. So if you overstate this COGS will decrease. That means this year's COGS is overstated. Previous year's COGS was understated. Am I right when I say this line? Because your opening stock is overstated. So current year COGS is overstated. But since this year's opening stock was previous year's closing stock, that means my previous year's COGS was understated. Yes? Do you understand this? This year's COGS is overstated. Previous year COGS was understated. So you recorded less last year and you recorded more this year. What you didn't record last year, you recorded this year. Makes sense? You recorded less last year, you recorded more this year. So how do you treat previous year's mistake? How do you amend previous year's mistake? What would be the impact of the COGS? You'll further say, if previous year's COGS was understated, that means cost was less, thus profit was overstated. Previous year's profit was overstated. To rectify previous period error, statement of changes in equity is impacted as per IS 8. So there is a standard known as IS 8, which talks about changes like change in accounting estimate, previous period errors. So if you make any errors and you realize them later on. So let's suppose 2022 passed and in 2023, I realized the mistake I made in 2022. So I can't make the change in 2023's balance sheet. I would rather make the change in the statement of changes in equity. Like I can't make the change by going to the time machine and going to 2022 and making the changes in that year's balance sheet or P&L. Neither I can make the change in this year's P&L. So what I can do is I can change the statement of changes in equity. So my debit will be given to, I will reduce my profit from the previous year. Where is the previous year's profit recorded? It's recorded in retained earnings. So my retained earnings will be reduced and my this year's cost will also reduce. So my entry will be retained earnings debit by 0.7 million, which is basically 700 million, or you can say $700, and cost of sales credit by 700. Yes. Do you guys understand this entry? Please confirm to me, then only I'll move forward. Do you understand this entry? Debit retained earnings and credit COGS. Okay. Last COGS less profit overstated. How? Nikita, last year's, what are you asking exactly? See, what I meant here is last line. If previous year COGS was understated, that means cost was less, thus profit. That simply means our last year's cost was understated, right? That's what we've concluded. So if our cost was less, that means our profit was more, because how do you calculate profit? Revenue minus cost. So if you recorded less cost, that means your profit was high. It was overstated. So we need to remove our profit. We need to rectify our profit, because at the end of the day, cost impacts profit only, right? Yes. Okay. So let's make its impact here. We will make its impact in statement of changes in equity. We will call it as error rectification of inventory. So if I rectify this error in the retained earnings, I need to deduct 700. Whatever is the opening balance, from this I need to deduct 700. And for my COGS, what's my COGS as per the question? Let's see the question figures as well. So as per the question, my cost of sales is 11,600. So from 11,600, I will remove 700. So 10,900. And what's my opening value of retained earnings? As per the question, it's 43,200. So make sure you copy right figures. That's part of your successful journey. So if you copy wrong figures, then there's no point. So 43,200. Okay, awesome. Done. Next, the provision relates to a court case in existence since December. So Mims company settled this case on 31st December for 6 million. The full amount was credited correctly to cash, with a corresponding debit entry being made to suspense account. So what these people have done, there was a court case going on. So on court case, you create a provision. What's a provision? It's a liability. Which standard applies here? IS 37. So if you guys have done this standard, you will understand what I say. If you have not done, then it's okay if you don't understand. Once you'll complete IS 37, you'll understand it. So the provision relates to the court case, which is going on from the previous year, which is December 2014. And we have settled this case. That means we are like, we paid 6 million and we are out of this court case. But this full amount was like, when you pay money, cash gets credited. So you have credited your cash correctly. What should have been debited? Your provision should have been Debit it. You should have removed your liability. You said, I have a liability of 6 million. Now you're making the payment, so you're supposed to remove the provision. But you have not removed the provision, right? You've rather taken it to suspense account. So what's there in the suspense account? 46,500 is put in the suspense account. So maybe in further parts of the question also, they tell us something else was taken to suspense account as well. So 6 million is clearly taken to suspense account, which is like you are supposed to debit your provision and credit your cash, rather you know, debiting the provision. You chose to debit suspense account. Correct? That's one thing. Okay. Let's move forward. So what will be my accounting treatment for this one? Please have a look at it. If you, okay, in their trial balance, they've given you administrative expenses, right? So what we will do is, we'll make a working note to explain this one as well. With the explanation, you'll understand. The court case provision is settled and thus should be removed. Yes, the provision uh, is of we can say the provision is of, rather than writing this, the court case is settled and thus the provision should be uh, removed. However, the entity credited cash and incorrectly debited suspense account by 6 million, which is wrong. So what we will do to rectify this error? They debited suspense account wrongly. So we will credit suspense account. We need to reverse it. So credit your suspense account. Yes, by 6,000. And what's your provision amount? Is the provision amount given to you in the question? Check this out. Provision is given to you at 4,600 in the trial balance. So they said the provision was of 4,600. So you will remove the provision. So provision debit. Provision will be removed. Provision is a liability. It has credit balance. I'm removing it. Thus it is debited by 4,600. So you remove the provision of 4,600 by paying 6,000. That's a loss to you. And that loss is treated in statement of profit and loss in administration expenses. So admin expenses debit, balancing figure. So whenever you have like any such loss which is not related to factory, you usually put it in office expenses, which is administration expenses. So what is my administration expense here? The balancing figure, which is 6,000 minus 4,600, that is 1,400. So provision debit, admin expense debit, suspense account is credited by 6,000. So how does this impact your question? So you will simply go to your statement of profit and loss. Your admin expenses are getting changed. They are actually increasing by 1,400. So what's your admin expense in the trial balance? 10,900. That's your administration expense. So what you will do? You'll say administration expense 10,900. In this, I will add my 1,400, which is related to provision. So no need to separately explain it. You've explained it once in your working note. So you can simply add that 1,400 in your cell, in your formula. If you want, you can tell the explanation here, like which the examiner can see. 10,900 plus 1,400, which is coming from working note number 2, just to refer to the relevant working note, so that examiner knows from where are you getting this 1,400. So when I put an equal to sign, the whole thing vanishes and I get the answer. That's why I said make a separate side on the right side, write it that 1,400 I added into admin expenses from the working note number 2. Right? Are we guys clear on the provision part? That it should have been removed? We didn't remove, we rather put it in the suspense account. So now we are removing it, but we are removing it by 4,600, but actual payment made was 6,000. So the extra payment that we made was a loss to us, which went to admin expenses. Do you understand till the second point? Yes or no? Are we all clear till here? Okay. Income tax. Now comes deferred taxation. So if you guys have done deferred taxation, you'll understand deferred taxation and the IS 12. If you have not done, then you will not understand this. So then don't judge yourself or don't get unhappy or disappointed. This is related to IS 12. Income tax figure in trial balance relates to the under or over provision from the previous year. The current year tax is estimated to be tax refund. What is tax refund? Tax refund is basically if, for example, I had a loss during this year, or, like I save tax. Basically, either I pay tax to the government or government owes tax to me. I paid more tax than what I collected. So government is supposed to pay the tax to me. Like they give me the refund. That's an asset to the company. So you have a tax refund. Maybe this company was loss making. We'll see when, we are making the statement of profit and loss. So I think we will get a loss. That's why we are getting a tax refund. In addition to this, there was a deferred tax liability of 8.2 million. So my current year taxes, there's a tax refund of 1.2, and whatever is given to me in the trial balance, that is either under or over provision. So what is given to me in the trial balance? I have been given 140 as a debit balance of income tax. So debit balance of income tax, is it under provision or over provision? Is it under provision or over provision? It's under provision. Why is this under provision, guys? It's given to you as an expense. What is under provision? Please understand it. The concept here, I'll just teach you on the board. Okay. Yeah. So here I'll just tell you what is the concept of under and over provision. Please listen to it very carefully. So whenever we have any kind of like profit for the year, or you can say we make a gain during the year, so we are supposed to pay tax on it. Like I just recently, all of us just recently got over with our 31st March 2023, right? That was the closing 2024. So that was a closing of 2023 and 2024 financial year. Yes, we closed our year. But have you all paid the taxes yet? You might have paid the advance tax, but have you filed the return yet for this year, financial year 2023-24? We have not filed the return yet. It will be due like around June or July. Yes, it's due around June or July. I don't know the exact date in India. Okay, it's different for every country. So what I'm trying to tell you here is that your year ends and you pay tax later on at a very later stage, like after 6 months, 9 months. So that is something which is happening at a later stage. But for this year, I've already prepared my P&L. So in that P&L, I've already estimated my tax expense and I've shown my tax expense. Do you agree with me? Yes, I've already estimated my tax. even though I estimated before, even though I actually pay it later. So I estimate my tax before, but I actually end up paying the tax later. So what happens in this situation is what you estimate might be more or less than what you actually pay or end up paying. So if you estimated more, that is known as over provision. If you estimate more, that is known as over provision. If you estimate less, that is known as under provision. So if you provided less last year, so today you will record the expense of it. Today you will provide more. So that would be your expense. If you provided more last year, today you will provide less. Today you will have a gain because last year I estimated more tax. So today I will, save some tax. Like I over provided. So now I will give a credit to my tax liability. So what will happen in this case is, why did I show you this concept? Because if you look at your question, this income tax of 140, which is given to us as a debit balance, this is under provision. That means last year I under provided my tax liability by 140. Therefore, this year 140 is my fresh expense, right? So this is my income tax expense. So let's prepare our working note for the tax. Working note number 3, income tax. So we will say, what was the under provision from previous year? 140 was your under provision, so that increases your tax expense. So it's added. What is current year's tax? Do you have a tax expense or do you have a tax refund? It's a tax refund, right? It's a negative expense. What is refund? Income. What is income? Negative expense. So my current year's tax refund is given to me as per the trial balance. It's given to me as, not the trial balance, as per the question, 1.2 million, which is 1200. So I will say it's minus 1200. My expense will reduce by 1200. Then what else is given to me? They are saying there's a deferred tax liability of 8.2 million. So in this deferred tax liability, what you will see the movement in liability. What was your opening deferred tax liability? 7,700. So your deferred tax liability has moved from 7,700 to 8,200. So movement in or increase in deferred tax liability is an expense to you, so which is added to your income tax expense. So it is from 7,700 to 8,200. So my expense is 500. So what is my net expenditure? It will come out to be a negative amount. That means I don't have an income tax expense. Rather, I have an income tax gain, like a refund that I'm supposed to receive money from the government. How much money I'm supposed to receive? I'm supposed to receive 560. That's my tax credit, or you can say tax refund. 560. It's a gain to you. That's why it's coming out to be a negative expense. It is a gain. Therefore, coming out to be negative expense. So what you will do for this tax expense, where will this go? This will simply go in my P&L for the taxation part. I will say I have a tax refund, so it's not an expense. It's rather a gain. So gain of 560, right? That's what I will do. Next, what do I have? On 30 September, Mims made 144 right issue. The exercise price was $3.5 per share. The proceeds were correctly accounted for in cash with a corresponding credit entry being made in the suspense account. What is right issue? It's like a share issue. You will get to know what is a right issue in the chapter of EPS. Okay. So that is something we'll do later on. But for now, just understand what is right issue. It's share issue. Like you issued normal shares, share capital is issued, right? So that is a kind of a right issue. What is right issue? Right issue is a discounted issue. Like if you are already enrolled with me, let's suppose in future you say, ma'am, I want to study SBR with you. So you will say, ma'am, please give me discount. I was already with you in FR. So you will ask for discount because you are an existing student. So that is right issue. Like to your existing shareholders, you give the shares at a lower price. That's right issue. So we made 1 for 4 right issue. For all, for every 4 shares that were there, we issued 1 right issue. So how many shares were issued? Make a working note. Working note number 4, right issue. For every 4 shares, 1 new share was issued at a discounted price, right? So how many shares were issued? How many shares were issued? Let's see. Total shares which were there in the company, we will get to see from the trial balance. Share capital. My total share capital was 60,000. So for every 4 shares, out of 60,000, for every 4 shares, 1 share was issued. So 15,000 shares were issued. What was the share issue price? The share issue price is given to us as $3.5. So we got the share issue done at 3.5. So the share issue happened at this 52,500. What is the nominal value of the shares? What is the face value of the shares? It's given to you $1. So you issued them at 3.5. So 15,000 goes into share capital. In this share issue, 15,000 is your share capital and the extra is your share premium. 2.5 is your share premium, which is actually 15,000 into 2.5 because you issued it at 3.5, right? So out of 3.5, 1 was the actual face value of the share. So the extra price that was 2.5, that is the premium amount. That is 37,500. So where will this share capital and share premium go? Statement of changes in equity. That's why I've prepared it. So let us take it to statement of changes in equity. We'll say share issue or right issue. Share issue, right issue. My share capital will increase. So my share capital initially was 60,000. Opening balance was 60,000. But then there was a right issue of 15,000. And this led to increase in share premium also by 37,500. And the share premium opening balance was 0. So that's the only effect of this working note on my answer. Do you understand the 4th point? Are we all clear till here? Yes. We all clear till here? Yes, Nikita, in point 2. What's the doubt? So in point 2, there was a provision. Provision create. Why? Why should you create provision? She's saying provision should be created. They said you settled the claim. You had a provision in the trial balance. You already had a, see, you already had a provision in the trial balance of 4,600. In the second point, they are saying We have a provision already which is settled. That means जो भी liability थी आपने repay कर दी. You already repaid the liability which was there. So the liability was of 4,600, but you ended up paying 6,000. So when you pay extra, I said it's a loss. That's why I added it to my admin expense. So provision is already there. Yes, court case leads to provision, but that was already there. We settled this provision, so it was to be removed. You understand? From the last year, the provision was already there. Yes, Nikita? Yes, we settled it. That means we paid it to the court. For what you created the provision, you met that motive. So you paid that money. No point of including it in the liability now. Okay, fifth point. Yes, we paid extra. That's why loss. Yes, we paid above the required amount. The required amount as per us was 4,600, but we actually paid 6,000. So the extra amount that you paid was your loss. Maybe you thought you will not pay. Court case is very dicey, no? How would you know what court will penalize you for how much? You thought they will penalize you for 4,600. So you created a provision of 4,600, but actually they penalized you for 6,000. So you paid extra. When you paid extra, that was a added loss to you. Simple. No extra loss that you pay is your loss. Why liability? You made the payment, no? So 6,000 cash is credited. Entry is P&L debit, cash credit. So I've already credited the cash. Why will you touch liability? Mm-hmm. Point one, inventory. What's the issue in inventory, Ali? Tell me. I'll go to the point one. Read it. What's the issue? Why COGS go to credit? Okay. COGS goes to credit. Let me explain. This year's cost of sales, okay, this year's cost of sales is recorded in my statement of profit and loss. Yes. Last year's cost of sales was there in last year's P&L. Last year's P&L we don't have today. What we have from last year's P&L is retained earnings. You never carry forward. Have you ever heard opening cost, opening admin expense? You never carry forward P&L items. It's always balance sheet items which I carry forward. So whatever you get from your statement of profit and loss in a year, that goes into retained earnings, right? So from previous year's P&L, what today I have is who's the representative of previous year's P&L today? Retained earnings is the representative, opening retained earnings, right? So I can touch the retained earnings to impact my previous year's P&L. But this year cost, if that has to be adjusted, I can adjust it because this year's P&L is not yet finalized. I'm still making it. So they said that my previous year's inventory was overstated. That means opening inventory for current year was overstated. Where is opening inventory recorded? In P&L, because you are making P&L. Opening inventory is recorded in cost of goods sold. What's the formula? Opening stock plus purchases minus closing stock is equal to COGS. Now they're saying your opening stock was overstated. If you will overstate this figure, Ali, COGS will also get overstated? Yes or no? Direct impact, left hand side add, it's basic maths. On both sides, you will, on LHS and RHS, you will add something. That's the overstatement. So if this amount will increase, COGS will also increase. So if this is overstated, COGS is also overstated. So to reduce my COGS, what is COGS? COGS is an expense. Expenses have debit balances. When you want to increase the expense, you debit them. Here it is already overstated. You want to decrease it. You need to rectify the error. So to decrease it, you credit it. You understand? COGS is an expense who has a debit balance. To reduce it, I need to credit it. Yes, Ali, do we understand? Okay. No, why would you get, Nikita, why would you get a refund from court? Court penalized you. First, you thought court will just ask you for the payment of uh, this 4,600, but actually court said pay us 6,000. So why will court give you refund? Court is deciding authority. It gives you punishment. You thought you will be punished for 4,600, but actually you got punished for 6,000. So you make money to cash. You pay cash to the court. So you've paid 6,000 cash to the court. So extra money that you paid is your loss, is your expense. Okay. Yeah. Come to the fifth point. Mims acquired investment property for 20 million cash on January 2015. Just a second. Okay. So Mims acquired an investment property for 20 million cash on January 2015 and decided to use fair value model. Investment property you all have done, NCA, IS 40 will apply. We purchased it and we are keeping it under fair value model. As the property is expected to have 20-year useful life, depreciation was recorded. Do you record depreciation in fair value model? Investment property fair value model, is the depreciation recorded? Depreciation is not recorded at all. So this is incorrect treatment, mistake, error. You need to rectify it. So we will not charge any depreciation. How much depreciation have they charged? They've charged it on the straight line basis using 20 years as the life. So the fair value of the property at 31st December has been assessed to be 22 million. But no accounting has taken in place in relation to this. All depreciation and amortization is charged on pro rata basis to admin expenses. There were no further acquisitions or disposals. So the fair value was 22 million, but we have not accounted for this fair value. That's a second error that they have done. And they have taken the depreciation and amortization to admin expenses. So please make your working note number 5 related to investment property. So here you will say with regards to this investment property. Okay. So what I will write is IS 40 fair value model states that no depreciation is allowed in it, and at each reporting date the property or the asset is taken to its fair value and the gain or loss goes via which statement? Statement of profit and loss. That's what IS 40 states. So what is the depreciation that we have incorrectly charged? Incorrectly charged depreciation is property's worth was 20 million. Life of the property is 20 years. So we have charged a depreciation of 1 million, which is wrong. So that means I need to remove this from admin expenses. That's one thing. Secondly, I'm supposed to take my fair value gain or loss via P&L. So there's a fair value gain because they've clearly written here that your cost of the property was 20 million, but then the fair value was 22. So there's a gain of 2 million. So gain, fair value gain to be recognized. Fair value gain to be recognized regarding the property is how much? 22 minus 20, which is 2 million. So where will this gain be recognized? This gain will be recognized in investment income. So let's adjust our admin expenses. From administration expenses, I am supposed to remove 1 million. 1 million means 1000. So I'll remove 1000. I'll write it here also for examiners' better understanding. So 1000 is removed, which is coming from working note number. What's my working note? Working note number 5. Yes, that needs to be removed. And then I'm supposed to actually impact my investment income. So my investment income will actually increase by 2000, which is 2 million. So what's my investment income in trial balance? So in trial balance, the investment income is given to me as, where's the investment income? It's here, 500. So I will take 500 here. And from in this 500, I'm supposed to add 2000. So here you can write, we did 500 plus 2000, which is coming from working note number 5 again. Yes. So you explain from where you're getting what to the examiner. Right? Okay. Are you guys clear on this? Yep. Okay. Next. Last portion. Let us see what's there. Mims incurred a number of expenses in relation to brands. Brands is intangible asset IS 38 during the year and has capitalized the following cost. 1.3 million cash was capitalized or was paid on 1st April, that is during the year, to promote one of its major brands, which is deemed to have an indefinite life. So what you did, you capitalized it. Promotion cost. Is it right, guys? What is this? Promotion. Promotion is advertisement. Do you capitalize advertisement? Do you say that advertisement is an asset to you? You expense advertisement. You never capitalize it. Why? Because you can't control it. Can you control the advertisement? So today, if I run an ad for our batches at TG Professionals, can I control how many people will actually enroll? I can maybe control the areas which we can target with an ad. So you see many times there are ads. If you search for something, the ad comes up. So you can target, but you can't control who will actually fall prey to an ad, right? So everyone sees ads on YouTube, but we skip it. Sometimes people see it, sometimes they skip it. So you can't control it. That's why we do not capitalize it. So this 1.3 million is not capitalized, rather it is expensed. So when it is expensed, where will you expense it? You'll expense it in admin expenses. So please add 1300 over here as promotion cost. So it's your cost. So you will add 1300 and write it here as well, that 1300 is promotion cost, right? Okay. Next, 2 million cash was paid to acquire a brand from one of its competitors. So you paid cash to acquire brand. So when you acquire brand, yes, that is capitalized because it's an asset, intangible asset. So Mims expect brand to have a useful life of 5 years. Do you amortize the brands? Do you amortize intangible assets? Are you supposed to amortize them? Of course, yes. So I created my brand of 2 million. I created a brand of 2 million and they said that its life was 5 years. So I need to amortize it over 5 years. So MIM company intend to sell it after 5 years. At the point of sale, it is estimated that the value of the brand will have increased. So no amortization has been charged. So they are wrong in not amortizing it. So what we will do, we will amortize it. So where do you charge amortization? Admin expenses only. So put amortization here. If you want, you can make a working note out of it. Just write working note number 6, brand, and you can talk about promotion cost is not capitalized but expensed. Secondly, IS 38 says definite life assets are amortized. Thus, amortization on brand must have been charged, but they have not actually charged. So if I want to charge it, I will increase my admin expense by the brand was of how much? The value of the brand was 2 million and the life was 5 years. So 2 million divided by 5 years, which is like 400. But when did you acquire it? You acquired it on 1st October. What's your year end? Your year end is 31st December. How many months are there from October till December? October, November, December, 3 months. So into 3 by 12. So this is 100. So my amortization of the brand, which will get added into the uh, administration expense, is 100. Working note number 6. Yes. So add 100 over here. That's it. Yes. Let's see what's the last point now. MIPS paid a dividend of 0.04 per share. Recording the dividend paid in admin expenses. When you pay the dividend, you always pay out the dividend from the profit for the year. Dividends are not your expenses. Dividends are made as a cash payment to the owners of the company, which are the shareholders. So you adjust the dividend in statement of changes in equity and not in P&L. So let us give a small explanation here as working note number 7, our last point, dividend. We'll say dividends are payouts out of current year, or you can say out of reserves to the owners, and thus are not expenses to the business, but rather are removed from the reserves like retained earnings. So what I will do, what's the dividend here? We paid a dividend of 0.04. So how much is that, the dividend part? we'll just calculate. Total share capital was 60,000 plus 15,000 was also there. So total was 75,000. How much dividend was paid? 75,000 into 0.04, right? So that comes out to be 3,000. So the dividend paid out was 3 million basically. And you will say this 3,000 will be removed from admin expenses because you incorrectly debited your admin expenses with this. And also they will be removed or deducted from statement of changes in equity retained earnings. So what you will do, you'll go to your administration expenses. Just a minute. Why is this? Just a minute, okay? So let's go to our admin expenses. Remove the dividend of 3,000 from here. You added it as your expense, right? So you need to remove it. So also put it here. Minus 3,000. Working note number 7. And also remove the 3,000 from statement of changes in equity retained earnings. So dividend paid out. From the retained earnings, 3,000. Now let's calculate our total profit or loss during the year. So distribution, see revenue we will get from our trial balance. So what was the revenue as per the question? Let's fill in that figure. Revenue is 24,300. So 24,300. Then you have your gross profit coming out as 24,300 minus the COGS, that is 13,400. Now in this 13,400, you will deduct your distribution cost. Admin cost is 9,700. What is the distribution cost as per the question? 7,300. So take 7,300 over here. Then profit from operations would be gross profit minus the admin expense minus distribution cost, which is 3,600. So you're getting a minus figure. That means it's a loss. It's a loss from operation, not profit from operation. That's why you are having a tax refund. Remember, I told you we might get a loss here. So it's a loss from operation. What's your finance cost as per the question? So finance cost is 1,400. So 1,400 finance cost is taken here. Once again, it's a cost. So it's an expense to you. Investment income and taxation. So what's your profit for the year? Your loss minus your finance cost plus investment income plus the tax refund that we are getting. So this comes out to be a total loss of 1,940. So this is my loss for the year. Where is the loss adjusted in the balance sheet? It goes in statement of changes in equity, retained earnings. So you will say loss for the year. Loss for the year 1,940. It will be removed from the retained earnings. So what is your closing balance of share capital now? Closing balance of share capital is 60,000 plus 15,000. Closing balance of share premium is 37,500. And then the closing balance of retained earning is this whole sum 37560, and that completes your full-fledged question. A long section C question where we've understood the concept, we've explained the concept, and we have also required whatever was required, we have actually done that for approximately 17 marks. 12 marks for this and 5 marks for this. Do you understand this question? Do we understand this completely? Yes. Awesome. So now if during while solving this question you felt like no, I was not able to understand some part of it, or there were some issues, so you need to refer back to the class. So if you have not understood defer tax part, that means you need to refer to defer taxation recording. Okay. Now, you can also try some questions related to single entity. If you check in your portal, I've given you a section of kit question debriefs. So I'll show you just now. But if you check your index also, like these are the questions. So out of these questions, some are given to you as recordings. Some we will do in our like more further sessions. So some are already given to you. So you will keep this, in front of you. You can try Candy Company question. You can try Mobby Company question. These are also given to you as recordings. For your self practice, you can try maybe you can try Moston or Dugan. So you can check the questions which are available on the portal. Let me just show you. Under the section of Super 20 question debrief. Okay, just a second. I think I have not yet uploaded them. Fine. I'll upload them here. Okay, I'll upload them here. But you will find the questions here. For example, Mobby and Fresco. Can you see these two are related to single entity? So you are supposed to do these two questions. You can attend their debrief. First, you can try yourself, or first you can watch the debrief and then try yourself. So these two questions are there for you to attend. So if you want, you can do it. I would highly suggest that as in when you complete the syllabus, you also try the questions. So these are the 2, 3 questions that you can try. And right after your class, it's like recording is already there. I'm just supposed to copy it from the previous attempt. So I'll just upload those classes here, the Super 20 of the previous attempt. So those recordings are available, right? So I hope we are clear. Yes, Nikita, I'll check the revenue right after the class. I'll have to listen to the revenue part. Revenue. Okay. Yeah. So that's it, guys. Thanks for joining in live. I hope it was a helpful session. The Excel sheet related to today will be uploaded with the recording of today's class on the portal as usual, right? So I'll upload this Excel wherever you'll find the recording of the class in the June live class section. In the same, you'll see the attachment of this Excel. Okay. Thank you. Good night. All the best. See you in the next live class. Keep studying. We have group accounts coming up. So buckle up and see you next class. Yeah. Bye. Take care.